Good evening. And yes, it's evening. It's Ira Epstein with your metals market update. And this is for Wednesday, February 20th, 2019. And I am late. We're after 6:15 p.m. So we're already into Thursday's trade. And as you can see, in early trade on Thursday, you're getting a break in the metal markets. Now I was looking at seasonals, and you're in a time frame right now where gold often runs into resistance in terms of timing to the upside. Not telling you anything beyond that, but you're there. So now the question is, what happens next? You can see the dollar index was basically lower during the day, and we're already open in foreign currencies, and they're down a little bit. We know the Chinese delegation is in town. They'll have 2 days of meetings to see if they can avoid another round of tariffs on March 1st. We saw the FOMC minutes. It's more of the same, where the Fed is basically on hold. They'll be data dependent. They see risks that weren't there before, probably on world economies, and they'll watch. That's not bad. How long? Well, it's anybody's guess, but most people are not thinking in the first part of 2019. When we take a look at what the market's done for the week, we're up $25 so far. So even if you're down $5 tonight, let's understand this market's done pretty darn good. In terms of looking at where the market's at, you can see how you spiked when you broke out of this chart pattern. The pattern is still one of a lower low and a higher high. The market is still over the 18-day moving average of closes, which gives it an upside bias, and it's well over the 100-day moving average of closes. But you're in a resistance area as defined by the upper Bollinger Band. Now, two things happen here. First off, you always look to see if you're going to keep the market going, does it embed or not? So far, both numbers are not over 80, even tonight. So that tells me that the market is overbought, into resistance with upside bias. Should it want to correct, possibly the 18-day average comes into play. When I come to the GLD ETF, you can see that you're overbought. This market, unlike the futures, has been in an uptrend. It has hit its upside targets. I'm questioning if the market wants to pull back under that Bollinger Band looking for support. You're already 2 days over it. I count each day over a Bollinger Band as each one represents 1%. Think of it that way. 95% of the time, the theory is in this algorithm, the market will trade within the bands. When you get successive closes over it, like you did back here, I count each one of those days as one of those percentage points. Why? Because I'm thinking that the market will come back, and if I'm looking to enter the market, could I get in at a better price? I am not a net seller. In other words, going short against Bollinger Bands. And when I have upside bias, I'm certainly not looking to be short most of the time. There are exceptions. And they're called a LEST, L-E-S-S-T trade, which I described to my subscribers. And in fact, we had some of those I was trying to put out today, but not in the metals. You can see you've got the lower low, higher high in GDX, and you're into the resistance of the upper Bollinger Band and overbought here as well. That does not mean you're in a downtrend. It means you're in a resistance area. In the gold silver, you pulled back yesterday into the support of the 18-day average, and today you're getting a bounce against that right now. During the daytime, silver was a good gainer on this market. It got up to the upper Bollinger Band and ran right into resistance against it in an overbought zone. In the copper market, you're now 1 day over the upper Bollinger Band on a close. That's where you were today. Yesterday you were not. And tonight you're trying to pull back under that number. Now we know copper is counting and listening closely to how are U.S. trade negotiations with the U.S. going, because so many traders are thinking that copper may have put a bottom into the 250 area. When I come to the platinum market, close, but didn't quite hit the upper Bollinger Band. Overbought, been what I call a vertical price rise. Wouldn't surprise me if the market pulls back and tries to regroup at one of two numbers, be it the 100-day average or the 18. Am I saying it should go higher? No, I'm not. I'll be clear on that. It's not a trade prediction. I'm just saying that based on this chart, you're overbought and you still have the resistance of the upper Bollinger Band. The strongest of the metals, I know I'm a broken record, has been this palladium chart, and it just keeps getting over the upper band, pulls back under it, doesn't even pull back very often to the 18-day average. Did so at the very beginning of February, found its support there, and that was pretty much it. In the dollar index, I had said yesterday that you lost the embedded reading. I was looking for price to possibly make a run at the 18-day average because of that. You tell me what went on today. I think that that's the home run that I was talking about. Not a trade, the idea that bang, that's what's supposed to happen and happen and no more than that. You know, one of the tools that I use during the day, and people may not realize it, when I'm putting out my trade recommendations or looking to see if I'm going to write a story on something, I look at markets sometimes to see where they're at intraday to get an idea of the strength of the market or weakness of the market. And with that, it's called a formula based on this, the pivot point. You have a center number, and we teach you the formula in our videos and how to apply it. And just about every piece of charting software worth its salt will carry this formula in it. And you get resistance and support levels. Now, I happen to use 2 resistance, 2 support levels. So for FX traders, use more than that. But the idea is still the same. You're looking to see where a market's going to run into a zone. If you're going contra trend or you're long and you're looking to maybe come out of the market, could be either way. Or if the market's going down, what are you doing? It's typically not a spot where you're adding positions to. But I have found that using the slow stochastic study the way that I do with this gives at least me an idea as to where the market's at, and during the day as I'm writing my updates for my clients, I'm putting out points that I think might be interesting to them, and away you go. I will show this often in the mornings in my morning subscriber video if necessary. I also show in that sometimes the seasonals. In fact, I'm probably going to do that tomorrow in the gold market to show people where they're at in the seasonals. To get an idea and learn more about what I do, it's really simple. You can go to our website. You can sign up for the free offers. To find out about the morning subscriber video, which is very different, go to our research or education section. You can call my staff to help you with whatever you need. And of course, if you're watching me on YouTube, click here. It'll take you right to our homepage so you can do whatever you want there. I'm Ira Epstein. You have a good day. Talk to you tomorrow.